Start off with Tesla first off. Um, Obviously, very volatile name. I've got the chart up already over here, and what you can imagine here is it's kind of got that wedge pattern as well. It's hard to tell if it's going to reject off that top upper trend line or not, or if we're going to see it break through. Tends, hard to tell with the PE ratio. PE ratio is super high, 181. We definitely know that over the course of the last, few months, especially with the, tariffs and everything, especially with Elon and his public breakup with Donald Trump, there are a lot of, I would consider those to be headwinds for Tesla when it comes to it. So go ahead, Max, give me your analysis on the numbers, though.
Okay, perfect. And I was going to say, Eric, some of these numbers, when you're hearing them, I want you to think based on what you're seeing with the chart, do you think some of this has already been priced in? So just keep this in mind while we're going through this, because EPS, we're expecting 40 cents, expected 33% down year over year. Talk about a kick in the balls. Revenue, we're expecting 22.4 billion, which is down 12% year over year. Deliveries are down 13.5%. That is the worst ever that we're going into an earnings report with Tesla in terms of expectations from the street. Regular credit revenue is under pressure. Our earnings ESP is just negative. I didn't even get a number for it. And Zach's ranking is giving it a number 3, which is a hold, aka they have no idea. And if we look at the options flow, NVIDIA, Tesla, it has pretty much been a casino. We have about 1 million to 500K that separates it each time. Tesla is basically shrinking like your crypto portfolio in 2022 is the consensus with their EPS estimates. Now, what's going to be moving the needle and what investors are paying attention to? Couple things. Robo-taxis, number one. They're testing robo-taxis in Austin right now. Musk says it's a multi-trillion-dollar market. Analysts say, can we get an actual car that works first, though? Expect the call to be 70% robo-taxi, 20% AI, and 10% actual results. If it's one thing Elon Musk can deflect and do best is distract people from actual results and get them hyped on hopium. We have the XAI tie-in, Elon's other baby, XAI. That might get some love, so watch out for that. If he says AGI 5 times, the stock's going to jump 10%. We also have the Model Y launch out in China. This is Tesla's answer to the minivan, because I don't know if you guys know this, but a big thing in China with BYD is they create these like minivan-esque type luxury cars that have been doing really well, and they're cheap as hell. So that's the other big point for them. Bigger, more seats, more in Tesla's, designed to compete in China, where BYD is eating Tesla's lunch, dinner, and midnight snack without any type of heads up. Now, one thing to keep in note and some red flags, margins are a mess with them right now. They used to be an industry best. Now they're not so much. Tesla's cutting prices to compete, and it's working, but it's working against themselves when it's all said and done. What's worse, those regulatory credits that kept them afloat, they're currently on life support as well. We also have Energy and Optimus Robot. There's more sizzle than steak, though, here. Tesla's energy biz is down quarter over quarter. Optimus still isn't making lattes or folding my laundry, but that won't stop Elon from calling it a $1 trillion opportunity. So maybe let's have a drinking game tomorrow where we take a shot every time Elon says $1 trillion opportunity on the conference call. So it looks like tomorrow, really, let's talk about the bear case, because I think that's what everybody's interested in, and we all kind of have an idea of what the bulls are looking at. Every metric is worse year over year with Tesla right now. Musk is more focused on politics than production. Valuation still assumes a 50% CAGR forever, by the way. Regulatory credits are drying up, which equals a real revenue risk for them. And China and EV competition is a brutal battlefield that they still have not been able to fight through. So those are going to be the main things we're looking out for Tesla tomorrow. Again, we don't know how much of this has actually been priced in yet with that price activity we've seen over Tesla within the last week.
Yeah, I've actually had this chart drawn out for a little bit. Part of me has this feeling that we're going to see Tesla go through a full distribution phase. This is Wyckoff. I do have previous Wyckoff videos you guys can go ahead and take a look at as well. But it really does feel like, okay, we've seen the left side, the preliminary supply. We saw the buying climax and an automatic reaction. but we've seen quite a bit of these signs of weakness, especially as we dip lower. Right now we had a up thrust after distribution, and then now we're seeing, I believe, a last point of supply. So for me, yes, we could still see this break up above that little wedge I had drawn, but I would not be surprised to see Tesla coming back down toward that 220 range in due time. The issue with options has always come down to, figuring out the time frame. But with all these headwinds that we keep seeing, Tesla has been a big name, but a lot of times the bigger they come, the harder they fall. And we're very potentially seeing a last point of supply before we drop down lower and potentially head back down a bit further. Another sign of it is the fact that these PE ratios, 181, is extremely high. And I would really think, unless Tesla has the moat that, for example, Nvidia has, Tesla has lost a lot of its market share to competitors at this point. And especially with the other headwinds such as the EV credits being cut, etc., what is it that's really going to keep this name afloat? Aside from the AI, there's been talks about how Tesla isn't just a car company, they're a tech company and an information company. One of the things that they do have is the fact that every car that drives down every road is taking a high resolution video and photos of the road, and eventually they can create some sort of virtual reality with all of that information and update with updated video and of what's going on in terms of the roads and in terms of the world outside. But a lot of times you can also understand, and I'm sure everybody understands this, Elon tends to overpromise and underdeliver, where in business you tend to want to do the other way around. You want to underpromise and overdeliver. But it seems as if there's a chance that we could see Tesla headed down in the wrong direction. The thing that I don't necessarily love, especially because we do have earnings coming up, is that when you take a look at these names, especially something like Tesla, I'll show you right away, right here, with our implied volatility for the calls, we're already at 99 to 100%. So that just means, that's the calls. If I go look at the puts, same idea. But even if you're looking a little bit further out, look at the August 15th, which is the next monthly expiration. We are right around the in the money strikes, you can imagine, still around 50 to 60%, and all the further in the money you can see still is hitting over 100%. So the idea here is that the risk, I don't know if the juice is worth the squeeze on something like Tesla. If you do hit the right direction, obviously you'll make some solid money. You'll very likely see about 100% in terms of that return. But this is something I would probably say wait for the report and then take a position if you really would like to. All right. I like that analysis. I think that's a solid take on what's going on with Tesla.
I think it's
one.
just,
yeah, go ahead.
It's a matter of a distracted CEO that keeps kind of changing the narrative each quarter to fit whatever the investors want to hear for the quarter. It's very much how people are saying they voted for Donald Trump because he was running on all these policies, and now when we look at his tenure so far, he's not only fallen back off of those policies, but he's also completely almost abandoned them because A, his camp didn't like him, or it was just things he realized he couldn't execute on. Really, this is the same thing with Tesla. Their earnings report, if you catch it in the right direction, yeah, you might make 500%, but that post-pop is where you're going to want to make that money and see where is anything happening in the dark pools. Is anything happening with golden sweeps? You want to stay away from unusual options with this kind of stuff, just because usually those unusuals are going to be aggressive hedges against open positions that they have that you could easily correlate to the dark pool in terms of the timing of when that unusual hit and when that dark pool purchase occurred as well. So just another thing to keep aware of when it comes to options earnings trading, more so, is keeping track of those dark pools, because that was another thing Kivo highlighted in the Verizon thing. We saw a bearish flow going into Verizon, but if you looked at the dark pools, you saw steady and stealth accumulation happening over the last quarter in those dark pools. Same thing with, it could be the same situation with Tesla.
Yeah.
That's where looking at the dark pools a month out and then kind of organizing those by premium or money spent essentially, that'll give you real insight into, okay, where were institutions bullish and where did they start to back off a little more aggressively. Because remember, the goal of the dark pool is they can make moves and accumulate shares quietly without disturbing the chart and or the markets or options flow.
Got three little things I want to point out. So I'm just filtering for Tesla for the buys and for big money, just because with something this big, these are the one, they're not spending just a couple $100,000 on it. They're spending millions and millions. Three things that stick out. Number one, on 7/7, we have $1.8 billion being spent on Tesla at the close. Same with on the second, 1.46 billion, and then at the end of last month, 1.18 billion. So definitely, there's money flowing into Tesla. But it is a situation where, again, maybe they'll see some sort of earnings beat. Maybe price is going to shoot up, and then you might see a lot of these names start, or numbers and equity position holders start to maybe get out of those positions. But we will have to see. A lot of it will also come down to what the general sentiment and news around Tesla ends up being over the course of the next few months, if we'll see that full distribution. We did see the thing about these in big money is that a lot of them, not too many of them, are extremely short term. I see some puts over here for the 8th of next month, and then a lot of these are 2026. So the 15th of this month as well, that one, 36 mil, that might be an earnings play getting in on the 17th. So again, a little bit of a mixed signal in terms of what Stacks is showing us, especially with these bigger names. There are people playing both sides. So, I would say with what Max had to say in terms of the chart at least, and in terms of what analysis we have, it's very possible that we've already seen the bit of a run up in terms of, think of it this way, from July 7th, we saw that run up already, and this has already moved from that lower end, has already moved about 15%. So I would say the risk really here is to the downside, especially if it respects this wedge pattern that I've drawn. We might see it pop up a little bit, hit that, and then come back down. And I think that's kind of where this might very likely be headed.
Yeah, and like today, I mean, we're seeing 9 million, we're seeing 14 million in overall flow with 9 million going into calls against 5 million in puts. But if we look at our most hit contract on Tesla for today, it looks like it is those 330, I want to say 330 calls. No, yeah, 330 calls due for 725. 390, 390, 240, 250. These were all auto executes. So the idea here is these were executed based on price levels that these people had already drawn out. But we can also see the steady progression. They opened up a position at 10 a.m. With a 950 average. And at 234, that was the last order we saw, and they're already at a 1475 average. So they've already moved about $500 within a premium. Again, this could be a situation where we see a nice pre-earnings type run up, which then ultimately leads to an aggressive sell-off. We've seen similar patterns with Lululemon. Honestly, you're going to see similar patterns like this with Nvidia, Tesla, anything that is landing consistently in the top 5 of our flow scanner in terms of a retail name, not talking about SPY or IWM or QQQ. You're typically going to see that post earnings or pre earnings run up or pre earnings sell off into a run up. So it's really about, you need to, and I hate to say this, but you have to sit and stare at the chart and the flow. If you're going to plan on playing earnings, that is the only way to play it and keep your money safe, unless you're willing to gamble whatever money you're putting into your earnings play, 0 or hero. Those are really your two options. Luckily, you have me here doing earnings analysis, so we can sit and hang out from market open to market close, where we just watch earnings tickers. But Yeah, I love everything Eric just said. But again, this is a situation where I would go and look at Tesla, see what the most bought thing is, and then look at how that contract has progressed throughout the day, especially right now when we have 22 minutes until market closes.
Yep, completely.